Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday the 17th of December and ending Friday the 21st of December 2018. 2 full weeks left in the year. Market is in a precarious position right now. We'll talk about that. First of all, just remember that we did roll futures to the March 2019 contracts this year, so you're trading the H19s going forward for futures traders and for those that track the futures for the market directional purposes. Here's the ES front month futures contract. This is the daily chart of the broad market futures forum. This is the lowest close since in April off that first dip of the year, and certainly not pretty. And I'm going to tighten this up. Let's just take a look at the whole year. So let's zoom this down so we can just see. Now you can see the end of December, and we went up in January, but now we're basically in the lower half. I mean, there's only 2 or 3 days that closed lower than this all year, and they were in April. So definitely in danger of giving back any gains anybody had this whole year. Let's go through the major daily charts, and then we'll talk about the intra-week action. And then we will look at the week ahead, the economic data, talk about the roadmap for triple expiration and the Fed announcement. So crude oil down $1.35, back down to the near lows 51.23 on the close. Gold down $5.10. S&P cash index loses 50.59. Now remember, we had a 13 buy signal at the bottom in April, and that led us to a rally in the market. There's nowhere near a count forming here, so if there's a bottom forming, it's not going to be because of an exhaustion signal, and we've come a lot further down than we did then, so because we were a little bit higher last time. So this is not pretty from that perspective. Nasdaq 100 hasn't made new lows for the recent months, but it's close. Only I see about 3 days that closed lower than this, and it was down 173 on Friday to 6594.96. The SOX loses 17.02. The biotech's down 59.95. This one's the one I've been watching because as go banks and biotech, so goes the market, is the expression. And this one's got a good inverted cup and handle. And if it cracks the lows, it did have a 13 buy signal about 5-6 days ago. But if it doesn't hold that, cracks the lows, in particular if it cracks that pink line that you see down there, that's the risk line from the 13 buy signal. If you crack that, the biotechs are in trouble. If the biotechs are in trouble, the Nasdaq's in trouble. And if the Nasdaq's in trouble, everything's in trouble. So that's going to be the one to watch. The Russell 2000, also another one that is in trouble here, down 21.88 points. That is just not pretty at all. The VIX closes up 98 cents to 21.63. Now keep in mind, one of the differences here, we have not really had a high VIX reading yet. Usually when you get bottoms and big selling and then you get a little panic, and you might have said there were a couple days of panic about a month ago, but it wasn't that serious yet, and the reality is that the VIX didn't register it, and the VIX needs to get up over 40 for us to be really looking for a bottom, and we have not gotten anywhere near that. The trend closes at 1.25, the 10-day moving average now at 1.21. It's pretty high. Nasdaq volume 2.2 billion shares on Friday. So it's okay, but again, with the futures contract roll, Thursday and Friday had lighter volume than we've been seeing, and that's normal. Advanced decline ratio on the Nasdaq, very negative, negative 15.24, no, negative 15.38. Way more stocks down than up. On the New York, it's even uglier, negative 16.22. Google loses $21.83. Apple down 5.47. That's a bigger move for Apple percentage-wise, and this one does not look pretty. Netflix down $9.18. Amazon down 66.47. Tesla down 11.08. This is near the highs that Tesla's been the one that's held up. Facebook down 95 cents. Goldman Sachs loses $3.15. This thing has just been on a this is the whole year on Goldman, right? I mean, we came into the year up near 250. Now you're sitting at 172. That is not pretty. Let's look at the weekly on this one just to get an idea where we're at. I mean, this thing's about this thing it's not closer to the lows of 2016, which is lower than 2015, than it is near the highs of anything. So just keep that in mind. TLT, the 20-year bond ETF, up 41 cents, and it's well off the lows. The Dow Jones, which we don't really care about, closed down about 500 points, but this is a new closing low since back in May on the Dow, but that's not pretty. All right, let's take a look at the 5-minute charts. Actually, sorry, we're going to change it to 10-minute candles on the ES just so you can see the whole week. So we can see last Friday on the far left, we opened pretty flat Monday, went lower. That was actually the low of the week, believe it or not. Came back and rallied and closed about even after all that. Tuesday, we get the gap up, sold off and filled the gap, closed about even. So 2 days in, we'd gone nowhere, even though we had some volatility. Wednesday, we gapped up, tried to go higher. That's the high of the week. and then pulled back a bit, and actually still clipped positive. Never filled that gap on Wednesday. Anyways, Thursday, slight gap up, drifted lower, and filled the gap from the prior day. And then Friday, the gap down, tried to bounce early. But again, look at Thursday and Friday as this was the new futures contract. So you got the contract roll, and it's just choppy, kind of drifting action, which is common. And it doesn't usually take the market too far, which is why we made the high and low earlier in the week. Here's the Nasdaq side, looks exactly the same. We did not close at the lows of the week, but we did have the lowest close of the week. Those are two different things, right? All right, let's take a look at the economic data that's going to be coming out this week. And remember, there's a couple things to focus on here. First of all, we're getting near the end of the year. Let's talk about the whole rest of the year, not just this week. We'll do the map first, and then we'll talk about the economic data. So this week is triple expiration. This is options, futures, and commodities, all expiring on Friday. So that typically means that Wednesday would be your options unraveling move. If not Wednesday, then Thursday. It also typically means that Friday is dead. Everything's held in place because the floor's already protected itself with taking the opposite side of all the big options positions. So they all match off on Friday. So Friday is typically a bust. The other thing to keep in mind is that Friday is leading into the Christmas weekend. So Christmas Day is next Tuesday, the 25th, obviously, and the markets are closed there. Monday, the 24th, Christmas Eve, we're open for a half day. It's like the day after Thanksgiving. Nobody's going to be around for that. So really, you've got a long weekend, and then a lot of people will be on Friday because it's triple expiration going into that. So you can expect Friday really to be a bust. People will start to leave Thursday most likely at some point, and that'll be it. And not just for the week, by the way. Then you look at next week because you've got the Monday half day, which nobody cares about, the Tuesday holiday, Wednesday, Thursday, and Friday. We'll show you the volume in a minute and what it usually looks like at the end of the year. There's nobody trading. And then you've got New Year's Eve on the following Monday, New Year's Day, the market's closed. And then we start the year. The good news is I like this setup because you have Wednesday, Thursday, and Friday, 3 full days after New Year's, even though some people are still on holiday coming out of that. The market's like, it's a new tax year, things get going, and when you have just like one day before the weekend or something, it doesn't always start. But when you've got 3 days there, I think we can see some excitement as early as January 2nd, 3rd, and 4th going into starting out next year. Let's talk about the data, then I'm going to show you the volume stuff for Christmas. So Monday, Empire State Manufacturing Index, NAHB Housing Market Index, tick long-term purchases. Tuesday, housing starts and building permits an hour before the bell. Wednesday, current account and existing home sales. Crude oil inventory is an hour into the market. We have a 2-day Fed meeting with the announcement on Wednesday. So keep in mind, usually you get that options unraveling move on Wednesday, but the Fed announcement could really slow things down in the morning, and that might mean that doesn't happen until Thursday. We got the Philly Fed Manufacturing Index on Thursday, along with the weekly initial and continuing jobless claims numbers. CB leading index, 30 minutes in, natty gas an hour in. And on Friday, durable goods, the final GDP number for the third quarter, which is not a big deal because we've already seen the prior 2 numbers. This is the revision. And then core PC, price index, personal income and spending, and the final University of Michigan sentiment number for 2018. So that's the calendar and the layout for that. Now, let's put the Nasdaq volume up here, and let's just go back and take a good look. I'm going to put it kind of in the middle of your screen. So actually, I'll put it right here in the middle. So if you look right here in the middle of the screen, in the middle of this chart, basically, you'll see like 5 or 6 days last year in a row that are all down under that 1.6 billion share mark, right? That's the week of Christmas, and that happens every year. And it means that people aren't around, everybody's gone, everybody's done for the year. They've got their positions the way they want them. The funds have done what they need to do. People have mostly set themselves up for what they want from a tax perspective. They don't want to make any more adjustments. So, and they're enjoying the holidays. So that's typical, and that makes it hard to trade. So this year, the way that looks again is the half-day Monday, which nobody cares about. So it's only really Wednesday, Thursday, Friday that are the light volume. And then the following Monday, even though it's wedged in there, that New Year's Eve is wedged in there on a Monday, markets have to be open a full day by rule. But, it's still next week. That following week, Christmas week, is going to be slow. So this week is our last chance, and we do have a Fed meeting that can help or hurt here. There's news in the world, obviously. There's obviously some issues going on in the economy. I don't think the Christmas numbers are going to come in great, but that's why the market's sliding. But we'll see what we get. I'm hoping for some good action, at least somewhere between Monday and Thursday, maybe 2 good days would be great. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great Christmas, great holiday, and a great trading week. And we will not be putting up stock picks in that week over Christmas, although we'll do a market preview next weekend.